Harsh weather makes a mess of late harvest and closes the river system early. What does it mean for prices? Corn exports show signs of life after soybeans hog the spotlight this fall. What are the prospects for sales? Outside markets are on a roll. Will Wall Street euphoria spill over to LaSalle Street? Senior editor Bob Burgdorfer joins me to discuss these questions and more. Farmers love to talk about the weather, and even though it's almost Thanksgiving, there's plenty to talk about. Cold weather forced the earliest closing of the upper Mississippi River on record, while snow hampered already delayed harvest in the northern Corn Belt. Only 59% of the crop was harvested in Michigan, according to USDA, with progress at 64% in Wisconsin. Anywhere from 5 to 20% of those crops left standing in the field over the winter could be lost, knocking maybe 10 million to 40 million bushels off production. Another system is headed out of the southeast plains that could keep combines parked, but the outlook is dry for hard red winter wheat on the plains, at least for the next couple of weeks. Long-term forecasts put out Thursday look better for the southern plains, however. Weather remained an issue in South America, hurting prospects for wheat and delaying corn planting in Argentina. More rains around the way that should ease dryness in Brazil's key center west, but cause more setbacks in southern Brazil. Rains also aren't welcome for the wheat harvest in northeastern Australia, where drought already hurt prospects. Growers in the Black Sea region wouldn't mind some of that precipitation. Their crop remains off to a rough start. Basis for soybeans plunged 30 cents in the Twin Cities as the shipping season ended, but shipping costs are down overall. What's happening with grain transportation, Bob?
Bryce, grain movement is going surprisingly well. It is early and the harshest winter weather is likely still ahead, but to date barges and railroads appear to be moving these huge crops very quickly. So far there have been few complaints about any backups or backlogs and so forth, so the news is good at this point. Burlington Northern, or rather BNSF, the railroad this week, said that in October it shipped the largest amount of grain to the Pacific Northwest in October than it ever has.
Well, soybean exports are normally concentrated in the first half of the marketing year, but the selling season will be extended into the winter due to delays in South America. But deals being booked now are working into the period when Brazilian beans will be available. All those deals labeled for unknown destinations were foreign exporters anticipating these delays. I expect a lull until we get a better idea about how port congestion will affect shipments out of Brazil. The pickup in corn business is par for the course, with some buyers shifting coverage back to the U.S. for late spring and summer needs due to lower production in Brazil and Argentina. But many livestock feeders around the world will balk at higher corn prices, especially if cheap feed wheat is available as an alternative. So it's still hard to pencil out a big surge in U.S. exports. Wheat buyers are very price sensitive, but movement out of the Black Sea is slowing. U.S. wheat is still priced out of North African and Middle Eastern markets, but the gap is narrowing with European offers. Hard red winter wheat basis surged in the export pipeline here in the U.S. on hopes for increased business to Brazil, which has been a big buyer of U.S. stocks the last 2 years. Canada has a lot of wheat to ship out, which could keep the U.S. from gaining much market share into Southeast Asia, as Australian supplies will be down. So the jury is still out unless buyers get nervous about lower new crop production in Ukraine and Russia. One factor could be the soaring value of the U.S. dollar. What's happening with the greenback, Bob?
Well, Bryce, the dollar's at a 4-year high against other currencies, as we know, and often the market perceives the high dollar as negative to grain exports, as foreign buyers get less for their euros, yens, wons, and so forth. However, that's not always the case. Since the global recession of 2009, the dollar has been gradually increasing, but as we know, so have our exports. So there's other factors in play here than just the dollar. For example, growing populations around the world, they're eating more. Much of these populations are moving into the middle class. They want meat in their diets and more expensive type foods, and that requires more production. China is certainly one example of that. So the jury right now is still out on it as the dollar's impact on grain exports, particularly agriculture exports. So Bryce, does what's happening with the dollar have any other significant impact for crop prices?
Well, the value of a currency fluctuates for a lot of different reasons. The dollar rallied to new four-year highs earlier this year on ideas the Federal Reserve would be raising interest rates. Higher returns can draw investors to a currency. The greenback also benefits from safe haven buying that helped during the Ebola crisis and the conflict between Russia and Ukraine. The latest surge was reinforced by ideas the European Union will continue the type of quantitative easing the Fed is already ending. Plus, China surprised the market Friday by cutting its interest rates. While markets are cheering that news, it has a darker side for agriculture. Those who are optimistic these measures will spur weak global growth are buying crude oil, adding further volatility for Midwest diesel prices that have stayed on a roller coaster lately. Pessimists wonder if Chinese growth is getting weak enough to affect its appetite for imported food, especially soybeans. Crush margins are good so far there, but could deteriorate especially after buying ends for the Lunar New Year celebration. Before that, we have our own holidays. Have a happy Thanksgiving, especially you deer hunters who at least have some tracking snow.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you out.